Hi everyone, my name is Tahazia and I welcome you on my channel Sunlo. Firstly, I want to thank all of you for subscribing onto my channel. We've crossed 1,500 subscriber base and we're close to hitting 150,000 views on YouTube. So thank you very much. The topic today is going to be very interesting and I hope you guys are going to enjoy this video and share it with your friends. So the topic today is that what happens to our money if our banks shut down. For all those of you who are familiar with how the banking system works, you know our money which is kept in the bank just does not gather dust in the vault, and you can just go and take your money out whenever you want. That's not how banking works. So for all those of you who are familiar with how the system works, it's called the fractional banking system. Central banks or governments around the world will set something what we call the RRR or the reserve requirement ratio. So for example, if you deposit $100 in your bank account and 10% is the reserve requirement ratio, so the bank is going to keep the $10 aside and it is going to create money out of your money. So the remaining $90 out of your 100 will be lent out and it will charge interest, and that is what becomes profit for the bank. So if you're wondering how much money can a bank create out of $100, so you can simply do a math here. You can just simply divide $100, which is your initial deposit amount, with the reserve requirement ratio of 10% or 0.1, and that gives us $1,000. Scenes from the 2008 recession are quite fresh in my mind, and I remember how people were queuing up at the ATMs and the branches to take all their money out, but unfortunately a lot of them couldn't get all of their money. Now during the COVID-19, we've seen a lot of multinational businesses shutting down, filing for bankruptcies. So it is quite possible that a lot of these banks around the world will be scaling down or will be completely shutting down. And you might have your account in such a bank. So you don't have to worry right now. If you're watching this video, hopefully I'm going to try and make things quite simple for you to understand. What you've got to do is you've got to check with your bank how much of an amount is insured, right? So if you are in the US, it would be on an average $100,000. If you live in India, it would be 100,000 rupees. So in most of the countries, it is 100,000 unit of their currency. Now there are two possible outcomes if a bank shuts down. One, which is an ideal one, and that is that once the bank files for administration, the insurer will take control of the bank operations for a temporary period of time, and during this period of time it will find a healthy bank to acquire this ailing bank. And in this case you really don't have to worry much because your accounts will then be transferred on to another bank and you can continue your business as usual. So there's nothing to worry. But if the insurer fails to find a healthy bank to acquire the bankrupt one, then there is a problem, because in that case, if you've got more than $100,000 or more than 100,000 rupees deposited in a bank and the insurance does not cover all of that amount, in that case, let's say if you've got $500,000, you'll only be getting 100,000 back, you lose 400,000. And is there a way out of it? Well, not really, because after the 2008 recession, most of the policy lawmakers, what they did is they came out with new rules which actually paved a way to file for bankruptcies for these banks. So they can easily get out of it. Banks will be like, they'll get a clean sheet, they'll be out. As a depositor, I'm going to lose trust in this banking system. I'm going to lose a lot of my savings. I'm going to lose a lot of my money. So this is one major concern which a lot of the people will have and might face this as an issue if God forbid their banks shut down. So what you've got to do is, one, you've got to check with your bank whether whether the insurance covers an amount and you are within that amount, within that threshold amount, then it's fine. If there are other services, there are other insurer providers, that would be better if you could get it covered. What you should also be knowing is that a lot of the depositors would not even know whether the bank has any such insurance arrangement, because as a depositor, we wouldn't be paying anything extra in terms of these insurance premiums, because this would be between the bank and the insurer. And the simplest thing you could do during the crisis is that, for example, if you've got 500,000 rupees with you, you could keep 500,000, just split this into 5 lots of 100,000 and keep it in separate banks. And please make sure that these banks are owned and controlled by different entities. You don't want one controlling entity owning 2 or 3 out of these 5 banks, because in that case, if there 2 or 3 other banks are also shutting down, then you're going to be in big trouble. So please make sure that you put your money into different accounts and you diversify your risk. So if you've learned something new, then make sure you hit the like button, and the best way you can appreciate anybody's content is by subscribing their channel. Stay safe everyone. God bless you all.